Hi everybody, it's Chris here from Serene Education with the full maintenance update for the first week of June. June's already upon us. Okay, I'm just going to start with the euro against US dollar on the monthly, just to have a look and see what's happened this past month. And you can see that May, in fact, being quite a negative month indeed. We've seen a nice bearish engulfing candle. We've had a lot of consolidation at this level. Last month we had a small punch higher than the monthly fib level here at the 61.8 level. However, the momentum not really moving on through the month of May. So what we've had now after some negativity at this month is we've seen a bearish engulfing candle, which has now engulfed the last 2 months of prior data. We're back below the 61.8 level again, and you can see that the Osimo indicator down the bottom here, we're looking at a 1, 2, 3, 4, 5 consecutive months of resistance at the 61.8 level now. We've clearly not seen any new highs recently, and this bearish engulfing month last week has not really done us any favors, because now what it's done is it's actually taken away 2 months of movement above that 61.8 level at the 1382.85 change mark. So now looking towards this new month, the month of June, we could see price pulling back even further towards that 50% retracement level here at the 1348 and 54 mark, which is also the 20 period moving average on our monthly time frame. You'll notice that the actual template itself is still one of positiveness. We still have a blue arrow. The candlesticks are very much positive, so the upside trend is still very much in play. RMO is still well above the zero level. The Osimo is above the zero level, however, a 5th consecutive month now of consolidation, hence the reason why the indicator is dark green. We want that to be bright green, and that ideally closing above the 61.8 would give us a further bullish bias to the upside. So this month, in fact, you'll notice that the long-term sentiment here on the monthly is still very much higher. However, our weekly, daily, etc., you'll notice that we're starting to see that negativity play through. If I drop down to the weekly time frame, you can see that 3 weeks ago, in fact a full month ago, we had this shooting star, a bearish engulfing candle that engulfed a prior month's worth of data beforehand at the 61.8 level, and that led to the last couple of weeks of negativity. As it stands at the moment now, ideally, you'll notice on the weekly we still have the bias up. However, we do need to see a blue arrow. The last arrow we have is one of positiveness here, but you'll notice that the Osimo indicator is very much negative, and the R squared is not really confirming that negativity we're seeing at the moment now. So indecision last week, and if we look on to our daily, you'll notice that the institution moving average now is above price, where if I just pan out, you'll notice that since September of last year, in fact, the euro was very much trading above the institution moving average. However, near term, we have had a breach of that institution moving average, and we also have something that's very significant. We have a red arrow, red candles. Okay, the institution 20 and 50 all above price, which is a negative signal. The RMO is also below, as well as the Osimo. Here we had the same scenario set up. However, we're still trading above the institution moving average. There again, also above the institution moving average. So this now is more of a bearish confirmation, unlike over here where we're still trading above the institution. Here we have the institution above price. So negativity is definitely going to be something we'll be looking for towards for the start of June going forward, until such time as we actually get back above that institution moving average again, and ideally back above that 61.8 on the monthly. So now looking for any opportunities going forward, the Wednesday and Thursday support level here at 1358.62ish would be the level that we would need to see price actually trading below before we even contemplate looking for further shorting opportunities towards that 50% retracement down here, which is roughly about 95 pips and change away from where price is trading the support wise. So ideally this week, in fact, look to see a breach below that 1358 to start with, and then look to target the monthly fib level here at the 1348 and change mark. Moving on to sterling, here on the monthly time frame, you could see that price has been playing with that long-term resistance level that goes back to 2009. The overall sentiment has still been long upside. However, we've seen a lot of consolidation over the past couple of months as price has actually been twiddling its thumbs, consolidating in and around this 50% retracement level, which also is a long-term resistance level. You'll notice that price Once you got to this level, we've always had a major pullback. Here again through 2011, a major pullback. Here, however, you can see that price is definitely wanting to move higher. The last 3 months, in fact, we had a breach above the institution moving average. We found a support candle, and then last month, in fact, we saw price, or sorry, 2 months, in fact, we saw price moving higher. However, it's not been able to take that momentum on board now. If I just pan in so you can see a lot more, take the momentum on board and to push it higher. We've had a very indecisive month, which has now pushed price back below the 50% monthly fib retracement level here at 168.33 and 4, but it still remains above the institution moving average. So ideally, if you want to keep that institution moving average on a monthly as a clear support level going forward, as long as price maintains above that level, we should still be looking for long-term bias upside. Long-term, here you can see on the monthly, all looking positive. We have a blue arrow, blue candles, which is important. RMO is above the 0 level. OSMO is also above. However, you'll see that we've had 3 consecutive months now of indecisiveness. And that's clearly what's been showing over here. We haven't seen any true movement to the upside. Positiveness. Ideally, we want to be above the monthly fib, finding support and moving higher. We did see the start of that happening in May. However, close of May, we see price moving back below that level. So we want to get back above that as soon as possible. Down to the weekly time frame. Our weekly indicator is primarily positive, and the R squared is complementing that positiveness. We have a blue arrow. Candlesticks are blue. RMO is above. However, the OSMO is the only thing here that is not concurring with price at the moment. And then you see it, the MACD. A lot of indecision candles, spinning tops, no true momentum candles, and that's what we want to see from price, and ideally above that monthly fib level. You'll notice that the yellow line is my monthly fib level, monthly institution moving average. So as long as price maintains above that, my bias is still looking for buying opportunities. So at the moment now, I'd ideally like to see a bullish engulfing candle close higher than the current high that we saw almost a full month ago. Here, roughly around the 1698 mark, to see any further opportunities for sterling going forward. Go down to the daily, you'll see that the range becomes quite tight. We've had a lot of bearishness. We've seen a lot of swing lows. In fact, we haven't seen any new highs. And if I just look at the daily time frame, you can see prices now spent Wednesday we had a nice bearish engulfing candle closed lower. Then Thursday we had an indecision candle, and then on Friday we saw a bit of positiveness for sterling. However, that's now at the underside of a price support level here, which happened in early parts of May. So 1676, if this becomes a new resistance, then ultimately what we're looking for is the candlesticks to turn red, and then we should see all the indicators complementing that, and then we should look to the downside for further selling opportunities back towards that monthly fib level here at 166.24, but back towards that institution moving average down here at the 164.84 and change mark. Moving on to sterling, the US dollar against the Swiss franc, good old Swissy. You can see that the long-term sentiment on this particular pair is one of negativity, and the R squared is complementing that selling. You'll see all the candlesticks are very much negative on a monthly time frame. We do have a red arrow, candlesticks are red, RMO is below, OSMO is below. However, you'll see that the last 2 months, in fact, we've seen the OSMO turning dark red. So it's not telling us there's genuine sentiment movement in the direction of that negativity. And you can quite clearly see that we've had a lot of indecision. And then indecisions come around the 38.2 monthly fib level here at the 0.88423 and change level. We would ideally like to see a bearish engulfing candle close low and all that to see any further opportunities to the downside. And if I just drop down to the weekly time frame, you can see that price has actually been consolidative recently on those support levels, roughly around the 87.139 mark. So ideally, want to get back below those levels again to see any further selling opportunities in this negative outlook. The institution moving average on our weekly still very much above price. We back up above the 38.2 level though. However, we do have a blue arrow, but the RMO is still very much below. So we have a blue arrow, which is a positive signal. RMO is below, which is a negative. OSMO is above, which is a positive. But the candlesticks are still. So we have 2 against 2, which doesn't really do well. And you can see that we have breached the swing low, swing low, swing low, swing low breach. However, you can see that price is now consolidated in and around this area. If this is to be long-term positive, would have to see price trading above the institution to start with on any of these time frames to get a better feel. Down to the daily, you'll probably see that the daily, in fact, we're seeing positive across the board. So that should be reflected on the chart. There we go. You'll notice for the first time now since August, early start of September of 2013. In fact, we're back above the institution moving average. So now, if this is to be positive sentiment for the US dollar going forward against the US dollar, the Swiss franc, is to use it, that current institution moving average right now, as the new support. We've had resistance beforehand. Now this should be the new support at 89.46 and change. So the remainder of this week, like this euro against US dollar counterpart, we want to see support and resistance levels being forged. In this particular case, we want to see support being forged now at this level. We have a blue arrow. Candlesticks are very much positive. The RMO is above, which is a positive signal, and our OSMO is above, but it's dark green. Okay, so we've seen consolidation as we headed into Friday's close. Blue arrow, blue candles. Now, Monday, Tuesday, Wednesday, Thursday this week, we want to see the buying or the building process happening above this level here at 89.46 and change. If it fails to do so, then we could see a pullback and a continuation of that negative long-term sentiment trend that we see here on the monthly. So here, if this is to be positive building scenario for the US dollar against the Swiss franc, then we need to see a positive bounce here, and then we could likely target prior support and resistance level highs here. The swing high here at 90.67 and change to the downside. Another one over here at 91.21, etc. And then we start targeting the monthly fib level here at the 50% retracement, all the way up at 93.92 and change. So this week, looking to see support being forged out, to see a building process happening. If this is a genuine positive move for the US dollar against the a positive move against the US dollar, the Swiss franc. Last pair, I'm looking at the US dollar, Japanese yen. Here again, we've had a lot of consolidation near term. The overall bias is one of upside. What we clearly have here is the blue arrow, blue candles. The RMO is above. However, the OSMO is not confirming with that. We've had a lot of indecision recently, and price has just been moving sideways within a consolidative range. The actual indicator bar is all over the place. It's trading below, between the 50% monthly fib retracement level and the 61.8 fib level, and the institution is still above price. If we go to the weekly, that becomes a lot more aware. It stands out a lot better. You can see here there's a support level roughly around the 101, 117 mark, thereabouts. You can see that the past couple of months, in fact, prices fell to actually fall or break lower than that. And in doing so, she's found or forged out a nice support level here. But price has not made any new highs recently. And in doing so, she's actually been trading within a consolidative range. 103.35 and 8 is roughly where I'm putting that level. So you can see if we go down to a daily now, price has just been capped between those 2 points, and you can make money between those 2 points, but there's a lot of risk involved in trying to capture these movements between these two tight levels. So daily, if we are to see any positive movement to the upside, which is what we're looking for because of the long-term sentiment has been making highs, is to see price trading at least above this 103.35, 8 and change mark. And if we are to see any further negativity and a true change in market sentiment to the downside, then we want to see this long-term support level here at 101.17 and change. You can go lower or higher than that depending on what you feel to see a change in negativity, and we could target that monthly fib level here at the 99.80 mark. While it's trading within this consolidative range, for me personally, not really interested. And if you choose to drop down to your shorter term time frames to capitalize on that, you'll notice that on the daily we're still seeing swing lows. We're not seeing any new highs, and we're not seeing any new swing lows, something. So you can see that the institution moving average in particular has become a focal point for price. And if we don't see any new highs, then there's likely to be a new swing, and that's going to put more emphasis to the negativity against for the US dollar against the yen. And then we should look for a breach to the downside here at 101 to target daily the monthly fib level here at 99.80 and change. So here, patience is a virtue. Look for a close below this level here, or break of this current swing low to then look to see price testing back up towards this 103.38, 35.8 for the start of June. That's it, guys. Short and sweet. New month, we have non-farm payroll this Friday coming, because it's the first Friday of a new month, so be well aware of that. It's going to be a lot of data out this week, in fact, so be vigilant from Wednesday onwards, because there's a lot of information that's coming out. So just be aware of that. Apply that to, just be aware that news is going to be out. Just apply that to your current trading and keep it as simple. Back it up with sound money management rules, and you should be on for a winner. I hope to catch you guys during the course of the week. Until then, you guys trade serenely.